The Federal Housing Finance Agency has officially increased the conforming loan limit for 2026, and the new number is higher than most in the industry were expecting. Starting January 1st, the maximum loan size Fannie Mae and Freddie Mac will back rises to $832,750, a $26,250 jump from this year's limit. This 3.26% increase reflects the steady climb in home prices over the past year and will influence mortgage borrowing power in nearly every U.S. county. What's notable is that many major lenders like UWM, Rate, and CrossCountry Mortgage had already raised their internal limits early to $819,000. But FHFA's official limit overshot those estimates by more than $22,000, giving borrowers even more room to qualify for conforming financing at a time when affordability remains a challenge. FHFA calculates this limit each year based on the year-over-year change in its National House Price Index, comparing October to October. Because home prices rose 3.26%, all conforming limits rise by the same percentage except for the small group of counties, just 32, that didn't experience similar growth. High-cost areas get an even bigger boost. In places like California, New York, New Jersey, Hawaii, and the D.C. Metro, the new 2026 limit reaches $1,249,125 for a single-unit home. And in special territories like Alaska, Hawaii, Guam, and the U.S. Virgin Islands, the ceiling stretches as high as $1,873,675, accommodating markets where prices sit far above national averages. Federal Housing Finance Agency hasn't yet released the updated limits for 2 to 4 unit properties, but those increases typically track the same percentage jump. These numbers are especially important for buyers using house hacking strategies, small investors, and those seeking conforming underwriting on multi-unit properties. For buyers, the higher limits mean more homes qualify for conforming loans instead of jumbo financing, unlocking lower mortgage rates, easier qualification, and smaller down payment options. For lenders, the expanded ceiling widens the pool of eligible borrowers and shifts more demand toward conventional loan products. Overall, the increased conforming loan limit signals a housing market that has cooled from its pandemic frenzy, but is still seeing moderate price growth. And as we head into 2026, these higher thresholds will open the door for more borrowers to stay within conforming territory, giving them more flexibility, better pricing, and a smoother path to home ownership.